Hey guys, Lennon here with Passivo Real Estate Investments, and today I'm here with my partner Stoney. Stoney, what's up? How's it going?
How you doing? Good to see you.
Well, guys, today we decided to record this video for you, basically about a short discussion about how the tight supply of single-family homes that are for sale, it's basically driving the demand for rental housing, which obviously is super beneficial for investors that are investing in multifamily real estate like we are, and just rental housing in general, not only multifamily but also single family rentals. In any case, Stoney, what are your initial thoughts on the shortening of the supply of these homes for sale? We saw a big drop in the inventory that's available right now. So
right, there's been several impacts in that, and it seems like there's a lot of cost going up with a lot of demand for single-family homes, and people who've been in the past a few years have been driven out of single-family homes for a number of reasons. Of course, the subprime mortgage crisis. People lost a lot of homes then and cost them their credit worthiness. They were not able to get into homes. And so I think that affected the growth and the new starts, the rate of new starts of homes throughout the 2010s. That was certainly one impact. And so now we're seeing, as interest rates have dropped in the last decade, that makes homes more affordable. And so I think there's been a growing demand and other impacts as well. Of course, your age group, the millennials, has had an impact on that.
Yeah, so basically millennials being the largest generation alive right now, we surpassed baby boomers about a year ago or so. Yes, as we turn into, I'm well over my 30s, but as the majority of the millennials turn into the 30s, they start demanding for, or start looking for to buy, new homes. And that's driving the demand as well. But anyway, the supply, like just to give you a number, it's down 32% year over year in February, that is. And again, all these numbers and information, we're gonna share the source with you guys, so you can go ahead and check it out if you want. But yeah, single family homes supply or listings, basically it's 32% down this year, which is crazy. The average day on the market, this is in the whole nation, the average day on the market is going to be 20 days. I actually have a couple of friends that I saw on Instagram. They just listed their homes, or for their clients, that is, and one of them sold it, well, not sold it, but under contract in 2 days, and the other one in 5 days. That was just yesterday that I saw this, and wow. All of my realtor friends are obviously super happy. So yeah.
Yeah, especially here in South Florida, I've heard the same thing where people will line up the first day of properties on the market, and they'll be bidding on it and even bid above the asking price.
Yeah. So, and then the thing is that the houses that are I guess affordable for the people that are renting right now, or people that are living with their family but they want to buy their first home, which are the houses that are under 250,000, basically that hits the affordability threshold there. That's even tighter. So if you don't have supply of those types of homes, then people just have to continue to rent. Okay, so that's definitely driving. So obviously, us as investors in rental housing, we are benefiting from all this. That's why we're trying to talk about this metrics. I have a number here that the tight supply of homes increased 16.2% year over year for not the tight supply. The pricing, given the tight supply of these homes, the pricing increased 16.2% year over year, up to 334,000. So obviously, you're seeing the prices go up and up and up,
right?
And again, less affordable, and beneficial for us because people can't buy, they have to rent.
Yeah, there's been all kinds of different metrics that have had different effects on some of the pricing and the affordability. I think over the last decade, we've also had continuing to drop the interest rates. So that's made it a little bit more affordable, even though at the beginning of the last decade, some of these people who used to have homes dropped out, and we saw the home ownership rate drop from 69.1% down to about 62.9%, a huge drop and a big historic drop. And that was impacted that affected and a lot of people who thought, well, that was a permanent change. But then in 2016, that metric started to change, and more people wanted to own homes again, and that's come back up just a little bit.
So yeah, well, that's what happened, right? Like home ownership dropped, and then it came back again because of the low interest rate environment. Everyone now, and especially in the last couple of years, they've been trying to take advantage of that, right? Like,
Exactly.
So even the millennials that we were all thinking, well, we are all going to rent, and that's it. We're a generation of renters, which we are, and I guess in the majority. Mm-hmm. But we kind of decided, well, and I have a bunch of friends like that. They said that they were never going to buy because they were not able to afford it. But then they started doing well in business, and then the interest rates. So low, a bunch of them decided to actually become homeowners.
Right, and I think that's overwhelmed some of the developers, because developers have to take a long-term view, and they see long-term trends like the drop in home ownership in the early 2010s, and they have to. Then that takes up some time for that trend to change, and then for them to get cranked back up for addressing the demand.
Yeah. So well, that's definitely one thing, and then another challenge. Especially during the last year, all the winter storms and the basically inclement weather that we saw, especially in Texas and the Midwest and all that, made developers drop or basically made the new construction for single-family residentials drop by 10% year over year. That's not for single family necessarily. That's for residential housing in general. That includes multifamily and single family. For multifamily, the drop was particularly bigger. Was 15% less construction of new multifamily in the last year, due only to the inclement weather and all this situation that happened with the winter storms and all that. But I mean, that's also something that's temporary though, because what we're seeing right now is that 20% new permits year over year, an increase of 20% in new permits. So that means that while there was a big drop, developers do want to continue to build. Obviously, the demand is there, given everything that we've been talking about. The demand is there, and the developers have started to, I guess, file for new permits. So we will see an increase in new construction, but can they catch up with the demand? I'm not quite sure. I mean, not quite sure. No, I guess they can, but do they want to? So like it's kind of playing that game, right? Like I said, the developer you need to plan accordingly. So.
Exactly. And another impact that was going during the last decade, and that still has a strong impact, is that there's basically three major demographic cohorts that have been more tended towards a bigger percentage of renting than they have of owning, and that's been, first of all, millennials, and overall millennials have projected that they are going to own homes in smaller numbers than previous generations, but still there's a growing number. Obviously, as you said, it's the largest group, so them coming into the market at the right time for buying is going to push some demand. But then there are also the millennials, the baby boomers, our generation, who are now selling their homes, moving out in bigger numbers and starting to rent themselves instead of buying another place. And thirdly, are immigrants who are coming into this country and who typically rent more than they own, of course, especially until they get their feet on the ground. So those three different demographic groups will tend to push the growth of rents.
Yeah, and then it's still driven by the tight or the low inventory or low availability of affordable single-family residential. Like even if you're an immigrant, you come into this country, you might want to actually, you know, that's the American dream, and then you want, well, to me, it's the old American dream. But anyway, that's what they think they want, and they want to buy a house here, but they just can't, right?
Right.
We just talked about, especially houses under 250,000. That's especially tight inventory on that side. And then another challenge that's keeping the developers, I guess, from building new homes, it's the cost of labor that has increased a lot, and then especially construction material like lumber.
Right, lumber has increased like 180% the last year or so.
Which is crazy. And we have a number here that lumber alone has caused an increase of 24,000 in the construction of a single family home. Let that sink in. That's a lot.
Right.
And I want to give a shout out to Dustin Hendrickson. He always talks about following the cost of lumber and inflation and all that. I recently heard him talk about that. So he knows what I'm talking about. And yeah, so $24,000 increase in the cost of building a home just because of the lumber prices rising.
Right.
You know? So, well, I mean, that's definitely crazy. As the pandemic goes away, because during COVID we saw a contraction in the number of households being built, being formed, right? But as the pandemic, you know, I guess goes away little by little, we now see the formation of new households go back up again, and that also drives the demand for single family. These people want to buy. People want to. Even though the interest rates went up a little bit in the past couple months, they still want to go out and buy. But again, since they don't really have the inventory, there's only like 2 months of inventory, which is crazy.
Right.
So 100% seller's market.
Right.
And what we have now is that all these people and all these gang households being formed are going to have to rent. It's not like it doesn't matter if they want to or not, they just have to. And again, that's also rising the demand for rental housing and for affordable rental housing, and you know, especially in multifamily, which is what we, you know, the asset class that we invest in and that we like.
Right. Yeah, another factor too that we didn't talk about earlier is that last year during the pandemic, people were not spending money. They were saving money, and it went up to record levels in this country. The savings rate practically tripled, I think, in just a very short time. And so people do have some money holding back that they would like to buy, but with the prices going up so much, it's still making that really tough.
Yeah. Well, guys, there you have it. Basically, the rising demand for single-family residentials and the challenges that the developers are having have caused a shortening in the inventory and the supply. All-time low inventory. It's an all-time historic lows. It's never been this low.
Right.
So, yeah, there's no houses to be bought, you know, or there's no houses in the market to be bought. So people have to rent, and obviously, again, that's a good thing for us multifamily and rental housing investors.
Another reason why multifamily is such a recession-resistant investment.
Yes. So anyway, guys, if you enjoyed this discussion, if you want to join in, please do so in the comments. Let us know your thoughts. Let us know where we were wrong or what you liked about what we discussed. If you want to see more of this type of videos, also let us know. And please don't forget to like, comment, share. You know what to do. If you know of someone that can benefit from watching this video, share it with them. And before we leave, go to Passivo REI/dream if you are interested in downloading the book that we wrote called The 4 Investing Rules for the New American Dream. It basically shares our philosophy and our idea of how to invest to achieve financial and time freedom. So I think you're going to enjoy it a lot. It's free. So again, passivorei.com/dream, and you'll find it there. So thanks for watching, and see you on the next one.